Okay, good afternoon, everyone. Welcome back to Atrium Research's YouTube channel. Thank you for joining us for what I believe will be a timely and interesting discussion. Currently around the world, we're seeing a generational shift in leadership, and with that, a renewed focus on industry, particularly domestic supply, and that leads down into mining. And so from the US to Argentina to Guyana and many other countries, governments are rethinking policy, encouraging investment, and in some cases dramatically accelerating project timelines. And so the goal of this discussion today is to unpack what this means for the mining industry, the capital markets, permitting, and ultimately for companies on the ground, which we have a few with us here today. So we've assembled this group of panelists that have a hands-on experience in many of these regions. I'll introduce them one by one in a moment and get them going with some questions, and then we'll open up the floor to a more interactive discussion. And so with that, I would like to introduce Robert McEwen, the chairman of McEwen Mining, Elaine Ellingham, the CEO of Oh My Gold Mines, Peter Gianulis, the CEO of Allegiant Gold, and last but not least, Paolo Lostritto, the CEO of Sailfish Royalty Corp. Thank you all for being here today.
Thank you for the invitation.
Thank you.
Great. So to kick things off, again, we have Rob McEwen, who again is the chairman of McEwen Mining, which operates in 5 different countries. You have a pretty strong global lens on this topic, Rob, so maybe you can dive into what you've seen around the globe and this shift in policy towards a more resource-focused economic plan.
Sure. About a year and a half ago, Saudi Arabia started embracing mining. The Crown Prince came out and said he wanted to make mining the 3rd most important industry in the country. I was recently over there at a convention, mining convention, which 4 years ago attracted 7,000 people, and this year attracted 27,000 people. So almost bigger than the PDAC. And it was the first time I've seen any government being very overt in their embrace of the mining industry. And I thought of it as very disruptive. They were going to, your exploration dollar, they'll refund part of it. They'll allow you to own 100% of a company rather than only 49% previously. Tax rates are very low, energy costs are very low, labor is cheap, and they have a lot of transportation benefits. So I thought, well, this is really interesting, and are other companies doing that? And then you look to Argentina, and President Milei, who was elected last year, introduced legislation that would reduce the tax rates, take off the exchange controls, block some of the union effort that was going on there to slow things down. And just, they were the next country I saw that was really starting to say, we want mining in the country. We know it can help our economy get more employment. We've seen Ecuador do that, and more recently in Guyana. So you look and go, well, I was wondering why Canada hasn't done it yet, thinking this should become a virus and spread around the world. You're seeing it in Ecuador as well. So I think it's a positive trend, and the world's just waking up to the fact that the modern life we live is highly dependent on what we take out of the ground. So, and it has high-paying jobs, and it's something they forgot about for quite a while. So there's a positive tone, and then with the disruption of global trade, there's a rush by sovereigns and major corporations to identify and acquire interest in secure sources of supply. And there's a global rush. America signed a MOU with Argentina to develop their critical minerals last year, and I think you're going to see a lot more of that going on. So I'd say it's a positive time. The only caveat is some of the countries that the big sanctions are on, like China, is the factory of the world today. Mm-hmm. So, and a lot of the demand for the base metals is driven by China's demand, and no one's really sure right now how China's economy is going to go, particularly
Right.
after all the tariffs. So
Yeah.
we have a copper project in Argentina, so that's exempt from the U.S., maybe. Um, but you wonder if China has big tariffs and they were the biggest buyer of metals, will that translate into less demands due to the tariffs, at
Right.
least in the short term?
Yeah, and time will tell with that, and we'll get into some tariff discussion with regards to the U.S. in a moment. But Rob, before we pivot over to Elaine, maybe you can talk about what the new president of Argentina has sort of implemented and what you've seen over the last year for in relation to McEwen Mining's project down there, and what you're seeing unfold on the ground level.
Well, Ben, we've seen the new legislation reduces the tax rate from 35 to 25%. It will be removing exchange controls. They'll allow dividends. A lot of the complaints about even looking at Argentina before are being taken away. And should you have a disagreement with the government, they're allowing for the first time you can have arbitration outside Argentina. So you might get your money back a little faster if you win. Um, so for us, on our copper project in Argentina, rough calculation of the benefits to us is over 900 million improvement in our
Wow.
NPV. So it's sizable. It's over a third increase. So we'd be
Wow.
going from 2.8 to 3.7 billion on a copper project at
And I, and I,
375.
I guess my last question on that would be with regards to timelines to finance, permit, develop, build, construct. Obviously, again, it's a very large project. It's going to take a long time to get this thing up and built and in production. But does anything in terms of legislation and whatnot change to help push these timelines forward?
Um, well, we already had our environmental permit to construct
Yeah.
before the approval of the legislation. I don't think, but there is this push to develop minerals in Argentina. So they have the biggest is this large investment, foreign investment regime, and it's supposed to happen within 45 days. But if there's a question and you have to provide answers, the clock stops. So
Right.
we went 22 days before they asked us a question. We answered all of them, so the clock's starting again. So I don't know how fast it'll be to get the next 23 days to.
Right. Right. Well, again, oh, I think you just got muted there, Rob. I'm not sure how. I got it. Sorry, we missed the last thing you said there.
So I believe we're going to see it this year. That
Hmm.
will be approved in the RIGI, and we hope to start building in the end of 26 and be in production the end of 29, doing
Amazing.
400 million pounds plus
Yeah.
a year.
Serious project. Well, that's all great, and again, the economic benefits to the project's value is certainly nice to see beyond just the government support. And so, pivoting over to Elaine, again, Elaine's the CEO of Oh My Gold Mines, which has a development project in Guyana. That project is growing quite quickly as we speak. But I thought that Guyana and bringing Elaine on would be a great sort of topical discussion around and case study for other countries, in that the recent international investment into the oil and gas space and the offshore oil that they found, and it's boosted the economy quite significantly, and all of that has a trickle down effect, ultimately affecting the mining industry. So Elaine, maybe you can quickly walk us through what's happened in Guyana over the last few years, and then we can get into how this affects OMI in particular.
Right, absolutely. Yeah, great to be here, Ben. Yeah, so in Guyana, I guess major, at one point it was known as the poorest country in South America. It is a little bit different because it's not really Latin America in the sense that it's the only English-speaking country in South America. So I always say it's a little bit more, it's very Caribbean, it's part of CARICOM. and the former British Guyana. So, of course, you're dealing with a legal framework that's quite familiar to us Canadians because it's basically based on the British system, just like us in Canada. So very familiar working there. I would say that there hasn't been a major change with respect to the government's support and enthusiasm for the mining industry. But as you pointed to, Ben, the major change in Guyana was, the discovery of offshore oil in 2015, and that it's a lot longer, a lot shorter timeline than us in the mining business. Their discovery was in 2015, and they were basically cash flowing by 2019, and so the government of Guyana has been receiving the revenue benefits from that offshore oil since 2019. So you're absolutely right. The change there has been just incredible. Already they're projecting that the GDP per capita in Guyana is going to exceed that, be the highest in the world by 2027, 2 years from now.
Wow.
So this is definitely a country in transition and a rapid transition. You kind of wonder how a government deals with that. Very interestingly, I think they're doing a great job. They didn't make any rapid knee-jerk decisions. They've been very thoughtful about their actions. But one thing you will see, and just going down to Guyana, and people that haven't even been there for 6 months or a year are shocked by the investment. Roads, they had across one of their major bridges that separates two parts of their capital city. They had a floating bridge, longest floating bridge in the world, which is just over a kilometer. And so there was one-way traffic at certain times and one way back. You can imagine the traffic jam. So very quickly they've been building this phenomenal bridge. Every time I go there, it's just developing the road investment. They're building 7 hospitals. Very significantly, they've invested $780 million building an LNG plant. And the substation, and then also Exxon is building a gas-to-energy system from the offshore. So this is a country that's just growing so quickly. I guess the interesting thing, even when I started going there in 2020, 2021, I guess, is I was concerned that with the income from the offshore oil, was the government going to kind of turn their backs and decide, mining's just too busy, too difficult. Not at all. I mean, this is a country that the backbone of it historically was gold mining. And so, there's actually, one of the unique things about Guyana is it has a population of only 800,000 people, really small. And there's 50,000 legal, registered small-scale miners. And they produce in the order of 200 to 250, sometimes 300,000 ounces of gold a year. So obviously, in a fairly poor, low industrial country, that's been very significant. So they haven't forgotten that. And then I guess the other key thing is that, of course, Omai, the property that we're working on, was a past producing mine, and a very large one. So, it was the previous time when the country had affluence. And so they haven't forgotten it. And it wasn't that long ago. It was shut down about 20 years ago. So a lot of the government people, they just want to see it redeveloped. So the other thing is, as we all know in Canada, it's the jobs in the hinterland come from the mining business. And, the mining business is one of the few businesses where you can go to the remote part of Canada or Argentina or Guyana, and suddenly you create 1,000 jobs and all the side effects, all the benefits, and the spin-off businesses in a remote area. So kind of got long-winded here, but basically, the Guyanese government, they're very pro-development for the interior.
Yeah. Well, no, and it sort of sounds like there's a lot of parallels, obviously very different, but with the money coming from the oil and gas, it's similar to Saudi Arabia in that they want to diversify out of the reliance on that. Obviously, it's not like they're pushing these oil and gas companies away, but to bring the jobs on land with their own people and population into the mining industry certainly is great to see. And so maybe a question for you, Elaine, is, what are you seeing from the larger, more legitimate mining companies in the country, Omai being one, We've seen some other transactions over the last couple of years. Where do you sort of view the international investment space into the mining industry in Guyana right now?
Yeah, absolutely. Like I would say that sort of the interest level in Guyana started to really develop after Guyana Goldfields developed the Aurora mine there, and then they were acquired for a beautiful premium to market, and then there's been some other large projects developed, I would say discovered and developed. So I mean, Reunion had a discovery, as did G2 in an adjacent project, and then Reunion was taken over by G Mining, that's really already trying to push very rapidly into production, basically construction phase. Very much assisted by a government that is, helping move forward on the permitting very quickly. And so all of that has kind of, created attention by the investment community. They've done well. They see a rapid path to development of these projects with support of the government. So all of those projects, and our project as well, very rapid rediscovery of new ounces at an old mine, that operated in a low gold price. So, at the current gold price, it's pretty spectacular and has come together very quickly. So I think investors can see projects that can move forward faster. Good, robust geology, and I guess to some extent this is more of a scenario where, it is an underexplored area for sure, and it's just was that attention brought to it, and I think the government has been supportive of mining for a long time. It's just that the market and was uncertain about this small little country down there.
Right. Yeah, well, no, it's been great to see, and I think Omai is reaping the benefits right now, and it's going to continue to over the next while. And even, like you said, the new paved road right by the site, hydro within 100 kilometers of the project under construction, so lots of benefits for that. And again, it's a brownfields project to be up and running once again in the relatively near future here. So pivoting over to Peter. Peter, again, he's the CEO of Allegiant Gold, which has several exploration assets in Nevada. And Peter, I do know you're quite entrenched in the U.S. political landscape, so I wanted to leave it to you to sort of walk through the experiences you've had in the U.S., where you believe they sort of are right now, and what the new administration has been doing over the last few months since getting into office.
Yeah, I mean, besides being the CEO of Allegiant, I run a fund that primarily invests in junior mining as well. Have been doing that since the early 2000s, first at Salomon Brothers, and then with Carrollton Asset Management, where I built a decent team. A lot of the guys have moved on who started their own companies, and it's been great. So I get to see it quite a bit. I never thought that the U.S. would be the topic of the day so pointedly, because of what has occurred in the last month within the political landscape. And I think clearly it's been a little bit chaotic because of the tariffs. What's being lost in the message, and I think a lot of people are losing it, the message is just the sheer amount of foreign direct investment that will be headed into the United States over the last 10 years. If you look at what the Emirates had announced, over a trillion, I think 1.4 trillion over the next 10 years. Qatar, probably another 300 to 400 billion into the U.S. But U.S. corporations are holding $4.5 trillion, about half of that in offshore accounts. And I know that there was an amnesty program 7-8 years ago that brought back some of that cash, but it wasn't that significant. And I think that you're going to see another push by the U.S. government to have corporations, American corporations, push that cash back in. And you're talking about the Apples, the NVIDIAs of the world that are sitting on hundreds of billions of dollars in cash. I would also like to highlight that the U.S. government has announced the creation of a sovereign wealth fund, and I have a little insight into that because I did spend some effort putting that plan together a little bit, and so I had my hand into that one. And I will say that you're looking at a starting point of anywhere between $200 and $500 billion without even having to raise that money. There's certain pockets within the U.S. government that already has those cash in treasuries, and so switching that over into a sovereign wealth fund is doable. There are some obstacles that need to be overcome, and those are just more political and regulatory. But if you add all of that up, you're looking at $4 or $5 trillion of FDI that I can just highlight. I think there's going to be double that through other countries. I just highlighted Qatar and the Emirates. And that being said, I do think that the tone within the U.S. government has turned into a very positive environment for U.S. domestic producers, particularly mining and energy companies. I do feel there has been a change, and it's been very, very swift, from the regulatory agencies towards mining. I speak to the BLM, the Nevada Department of Operations, the mining, the U.S. Fish and Wildlife Service, all of the other agencies. And I can say that there has, and it's been notable over the past 3 to 4 months, into something very pro-mining into the United States, and not for reasons of foreign direct investment, but I also believe there's job creation, and also this strong belief by the U.S. government, by the Trump administration, to secure critical minerals and other supplies. And gold falls within that, and they've highlighted that gold will be part of that initiative. Now, I do believe that their initiative will try to support the domestic entities within the United States, and they could take a direct equity investment or initiate some other programs such as grants. I do believe that the days of grants where it was a free money is probably not going to return. At least that's just been my conversations with the government, that I think that they're going to want to take a more active role, and there's plenty of money, but it's going to be done at some type of equity or debt level, and different types of capital structure. But I would say that all in all, that it is a very, very positive environment in the United States. If you can just look through all the tariff craziness, and haven't been a fan of the tariffs, and everyone knows where I stand politically, but even that said, I'm not in favor of the manner in which it's been has been employed. But that being said, I do think that this is just a temporary blip in the whole scheme of everything. I think cooler heads will prevail, and I think that after this initial bump, I think there'll be agreements coming into place. The United States, I believe, and I'm an American, have some legitimate gripe. I'm not sure I agree with the way it's being handled. And I think that the U.S. also has to take a step back and realize that, and I don't want this to turn into a political conversation, but I think the U.S. needs to step back and say, well, yeah, some countries may have taken advantage, but the U.S. has the single largest benefit of anything by having the reserve currency of the world. And I think that they're not necessarily thinking this through very clearly, that I would prefer to have the reserve currency and run a $1 trillion trade deficit all day long if I were given that option. So that's just my opinion, what I'm saying. And I think that the U.S., I think that there's a lot of good things happening with the Trump administration. I'm saying everything is perfect, but if you look at holistically how things are, and I have to add it all up, I think that there's a net a positive, and I think that things will be resolved. I think things will be resolved after the Canadian election. I mean, maybe Trump is trying to play a little bit of his hand, trying to get rid of the Liberals in Canada. And clearly his dislike for Trudeau was well known. Whether Carney plays a role or Pierre or whomever wins, most likely Carney, it appears to be the case. I think that the U.S. and Canada will ultimately come to an agreement because it benefits both sides, right? And I don't think there's any winners or losers, and clearly both sides, I think, lose by this ongoing. But I do think, in summary, U.S. has become a great place to invest. And I haven't said that, you know me, for a while. I do think jurisdiction is going to be very, very important. I spent 20 years of my life in Argentina as well, so I know Argentina very well, and also believe that's a great place. Where Rob's at, I think that's an amazing place to invest.
Yeah. Well, and so, Peter, just building on that quickly, in terms of the producers in the U.S., the big mining companies, I know you guys are quite proximal to Kinross and a lot of their assets.
Yeah.
When do you think we're going to start seeing these companies making big moves in the U.S. A lot of them, with where gold is today, their cash balances are as high as ever. When do you think we'll actually start seeing some of these companies really start to take action in the U.S.?
What I'm seeing, and it depends on the company, they're a little bit different, but I do see that one common thread amongst them is jurisdiction risk. And I think that, Kinross was burnt in Russia and other places, and I think that Barrick as well, and prior Chile, Argentina, and I think that they're going to stick to the jurisdictions. I think they're looking for projects that have the ability to host 3, 4, 5 million ounces. I think that you're seeing this. Kinross has been spreading around some of their excess cash into private placements and juniors, and you haven't seen that in a while. I think Barrick and Newmont have taken a little bit more hands-off approach on some of those, but you do see Agnico, you see Anglo, Centerra, I know, has been looking in Nevada as well, and but I do think that that's going to occur. I mean, the reality in many of these companies, they gutted most of their exploration team, so they rely on juniors to do a lot of the exploration risk. And I actually think that's the correct model, if you were to ask me. Juniors can drill, if you include all-in cost, overhead costs, and everything. Juniors can drill 30% cheaper per meter than many of the major companies. So I think that's the model. I think that's occurring. I've seen Kinross continue to be active in Nevada and other markets. Whether they go and acquire, I think you've seen it happen in Canada. I think those are, from a geological perspective, some of the big assets some of the big resources that can still be found. Kinross is very large in Nevada, as well as Barrick and Newmont, right, through their joint venture. So I think that they are looking at it, and they're sitting on huge piles of cash, and clearly gold at $3,000, their free cash flow must be around $1,200 to $1,400 an ounce. So cash is going higher. Now remember, though, that many of these companies also had activist investors come in and take a board seat, and so they're far more disciplined, not necessarily because they're disciplined because they want to be, but because there are other financial institutions that have taken, and hedge funds to be more specific, that have taken a role in the management of their finances and their capital structure. So I do see it happening. I'm seeing it actually becoming more prevalent.
Right. Well, and so that actually does lead into Paolo here. So I'm sure a lot of what you just said there, Peter, was music to Paolo's ears. So Paolo, again, is the CEO of Sailfish Royalty, which has a pretty substantial royalty on the Spring Valley Gold Project. And just for some context, it is held by a private entity, and so it's not, that project itself is not spoken about too much in the public space, but it is one of the larger gold development projects in the U.S. It's very close to a final permitting decision. And so with that, Paolo, maybe you could kick it off. You can talk about sort of the process. Again, I know you haven't been directly involved in the permitting process, but maybe you can talk about how this has gone through for that asset. I do know that the Spring Valley project being on BLM land has been a stress point in the past. Maybe those stresses are being relieved, and I'll let you run from it with that from here.
Thank you, Ben. Appreciate it. So yeah, Sailfish is a royalty and streaming company. We hold an up to 3% NSR on a project called Spring Valley that largely has been ignored by the market because there's not been a lot of data out there. The operator is called Solidus Resources. It was owned 100% by Waterton, private equity group, and only in the last 3 to 6 months there's been data that's come out that you can point to directly to understand the timelines, scale, and scope of the project. So what's been published in the public domain is you're looking at about 3.8 million ounces of gold in reserve, but it's important to highlight that that's calculated using $1,800 gold. The pit shell, we believe, will pull in a lot more of the resource. The resource in totality is 4.4 million ounces of measured and indicated, and just over 600,000 ounces of inferred, and that's calculated at $1,700 gold. So it tells you that this project, it's located right beside the Rochester mine, is something that a lot of the other producers out there are taking a hard look now that Solidus has put the data out in the public domain. So to finish the point, Ben, that you were putting up, it's been announced by the Bureau of Land Management that the final EIS will be published by July 11th of this year, and that they plan to have a record of decision by August 11th of this year, which means that shovels are going into the ground in the second half of 2025. First gold expected in 2028, just to provide some context. And the important thing that's happened at the same time that all this data has been put forward is that you've had 2 executive orders come out of the White House talking about streamlining the permitting process, and that you're going to finally de-bottleneck what was supposed to be a process through NEPA in which you would actually be able to make sure that there was a clear line of sight to getting a permit. And in fact, the opposite has happened since it was first formulated, I believe, in the 1960s. And so it looks like we're finally getting rid of a lot of the red tape that prevented a lot of these projects that got caught in a circular reference to finally move forward to get to a point where all stakeholders would benefit from the development of the asset. And it looks like Spring Valley is going to be one of them.
Great, yeah. And on what you just mentioned, as well as Peter, so how do you see this sort of trickling down into royalty companies in particular, their ability to raise capital and then deploy that capital into projects in the U.S.?
Yeah, it's not only royalty companies, it's producers and development companies as well. The fact that you have clear line of sight reduces the red tape, allows companies to make decisions and actually deploy capital with a view of making an acceptable rate of return for their shareholders, which is ultimately what every manager in the industry is trying to do. And they're trying to do it on a risk-adjusted basis because, as managers, we're trying to look at does it make sense to deploy that capital in Canada versus Argentina versus the US? And you're always trying to look at project risk, taxation risk, and execution risk.
Yeah. Understood. And so, great. So that was the first portion of this discussion. Now I wanted to get into a bit more of a discussion, quite frankly. So to kick it off, I know we did get into this maybe very briefly with Peter, but with regards to Canada, we do have, I believe 4 of us on here are Canadian. Peter has sworn his allegiance to the U.S., but given we have an election coming up within the next 30 days here in Canada, we will see the results of this, but it does sound like with whoever wins, there's still going to be more support for beefing up our own natural resource development and supply chains and so on. Might be a little bit different depending on who gets elected, but does anyone have any views on the Canadian landscape with regards to the mining industry right now?
Well, I'll jump in there, Ben. I don't believe the response that's been the government has been espousing is the correct one. When you consider that 75% of our exports go to the U.S., if you think about the customer's always right, the maxim of any sales, I would have thought the 2 candidates that are in the lead the first stop would jump on a plane as soon as it was announced and go down to Washington and say, okay, what don't you like about the way we're operating? And then say, all right, we're going to get on top of that. But to punch your largest customer in the nose is just going to provoke someone coming back at you harder, particularly with the gentleman who's running the U.S. right now. I think you have to seek compromise in there and say you're going to do it quickly.
Yeah, well, and the geography.
I'd like to add to that, Ben. I think Rob's absolutely right. The part of the reason why Canada has benefited over the 100-year history of being the U.S.'s neighbor is because we have this Olympic-sized swimming pool of an economy right next door, and every once in a while a little bit of water splashes over the border and kind of fills up our thimble. So it's very important to understand that part of the discussion process is understanding that there's a lot of inefficiencies that we've created ourselves, be it interprovincial. And so these are things that we should have done decades ago in terms of pipelines, infrastructure. The fact that you can't get BC wine in Ontario is ridiculous. So these are examples of things and inefficiencies where government, I mean, we all know this on this call, government is the most inefficient deployer of capital, bar none. And so they have to allow for private enterprise to go and do what it does best and deploy capital in such a manner that it's responsible and benefits all stakeholders.
Yeah, I'll add one thing just without disclosing too much, but I do think that the administration, Trump administration that he's put together, from Howard to pretty much everyone across the board, not all of them, but pretty much, is top notch. And these individuals have a very, very good understanding of the weak points in each of this negotiation, irrespective of the country, whether that's Taiwan, Canada. And I think, not being Canadian, but looking at and love Canada as a country, I would say that Canada has been their worst enemy in terms of a negotiating point, right? They've hurt themselves, because if Canada came in there with a different set of cards, and I think Paolo talked about it with respect to the pipeline, I think the negotiations would go significantly different, right? Like, you can't push Alberta gas to Ontario, or I'm not clear about the transportation system in Canada, but I'm clear that they need the U.S. to take a lot of the gas or oil or whatever the commodity is. And so I think Canada's hurt themselves in the negotiation. I'm not rejoicing in it. I'm just clearly looking at it from a pure negotiating perspective. And I think the Trump administration understands that. They understand the weakness of China, who's going through an economic contraction right now. And I don't think it's accidental that they've chosen this moment in time, whether that's in Europe, who stepping away from supporting Ukraine and saying, well, now you've got to fund it yourself, right? I'm confident that it's not accidental they chose this time to hit the world with the entire tariffs, right? And irrespective if that's the right thing or not, I think from a negotiating perspective, it's not unintelligent.
Mm-hmm. Well, and we'll see how this plays out. We could probably have another panel in a month to get some more answers. But maybe, in Canada, I think about a lot of the roadblocks that we've faced in developing these different industries is around ESG and the environment. And it's been pretty frustrating from my point of view, pretty heavily entrenched in the mining industry, seeing a lot of these projects get blocked for those reasons. Now, we can talk about this globally, the U.S. or Canadian in particular, but how do we, and any of you, view how the new governments will get involved and what we're seeing take place, and how that affects how ESG, is being considered with this new leadership? And we're talking about things getting pushed through faster. Will ESG still be at the front and center, or will it take a little bit of a backseat to get these projects?
I'll start off from a U.S. perspective. I think ESG I wouldn't say it's dead. It's taken many, many steps backwards, and I'm not commenting whether that's good or bad. It's just factual. I think that it depends on a state basis, on a state-by-state basis. But from a federal perspective, I think that the most important thing in the United States today is capital flows inside the country and reducing the deficit. Because if you want to talk about the Achilles heel of the U.S. from a negotiating perspective in the future, it's controlling the deficit. And if they're successful at bringing deficits down from $2 trillion to half a trillion, so 300 to 500 billion, it will be one of the most monumental tasks and success stories in at least decades. And so I think ESG is, I don't want to say it's dead. It's just not at the forefront any longer in the U.S. And I'm saying that with a decent perspective and also in feeling of it right now and talking with the government as well.
Well, I guess I would just comment that I wouldn't say ESG is dead. I think for those of us who've been in the mining business for a long time, I'm sure Rob shares this view, is we've always taken, the people in the industry I know, we've always taken that into consideration. We will always say that if you do exploration, you must consider the communities because you're working within them. We've always done that. I would say that the wave of sort of formalizing the ESG frameworks perhaps went a little bit overboard. It became the buzzword, it became popular, and the reality is it probably was good to get some formalization of that and a realization of it, even within the industry, to put formal sort of guidelines and posts in for us to think about it in a more organized fashion. I don't think it goes away. I think it's just, it's like all of these things, the pendulum swung too far. And so, I think as all of us on this call, we don't want to say that it's taken a back seat. I would just say that it's entrenched in our business. I think there's global standards. I know that Rob, it doesn't matter whether he's building a mine in Argentina, in Northern Ontario, or in Africa, the standards that he'd be applying and that our consultants would be applying and that we would expect are the same. So I think it's, I would just say it's not front and center.
Yeah, I think that's probably a better way to say it than the way I characterize it. I think when I say it's taken a backseat, I think it's taken a few steps back in terms of order of importance, but clearly communities and locals, state or provincial, will implement their standards, and I think that's the bar has been raised for ESG across the board. I just don't think it's going to be pushing the envelope any further on that side.
I think it's we have to get support of communities, and there's a long history of a negative perception of mining, which is going to take time to erase. But it's, you could spend a lot of money on exploration and then with engineers to plan a mine and have the community shut you down. So I think you, as Elaine and Peter were saying, you have to incorporate that into any design you have on a mine. But I think governments trying to enshrine it in legislation is the wrong way to go at it. If they want to increase their exports to gain foreign exchange, we're going to have to see the government do that, as well as all the other service providers to the industry. Like, I think the industry should be going after the investment bankers, the lawyers, and the politicians, and educate the public on how far the industry has had advanced in terms of stewardship of the environment, and point to the good examples of reclamation that are out there, and work to change that perception.
Right.
And I think, just going back for a moment on those tariffs, these counter measures against the tariffs, if they were taken to the extreme, we could see our dollar drop dramatically relative to the U.S. It could go down to 10 cents relative to the dollar. And that you don't want to see, because that contributes to inflation and a lot of poverty in the country.
Yeah, absolutely.
Rob, I think you're right. This is in keeping with this administration's philosophy of shoot, ready, aim, get you to the negotiating table, and then really sit down and talk turkey. So I think cooler heads will prevail, as Peter pointed out earlier.
Yeah.
Well, we can all hope so. And one more thing I just wanted to add that is something I like to mention often with the mining industry and even others is, in more foreign countries, third world countries where a lot of mining and different industry takes place, their environmental regulations for the local miners is far different than what our international businesses implement. And so the supply for whatever metal it may be is going to come from somewhere. And so, quite frankly, my viewpoint is that North American countries and businesses should be, the environmentalists should be promoting our businesses more than ever because that supply will come from somewhere, and you want to make sure it's coming from a company that does hold themselves to a high standard when it comes to ESG and the environment. So moving on to the last topic, and Peter, you did touch on this very briefly, but how do we sort of see the U.S.-China tensions and even Canada-China relations, if we want to call them that? How do we see that shaping the mining industry? And Rob, you did mention as well, China is importing and is a huge buyer of many metals. So how do we see that relationship and dynamic going over the next few years here?
I don't see anything developing any more negatively than it is already between the U.S. and Canada. I think that at the end of the day, they're first cousins, and I think most of these issues will be resolved very, very quickly, irrespective of who wins, and I think it benefits both countries. China's a different story, and I think that the U.S. legitimately, that's not my opinion, I just think they strongly believe that China is a adversary in the global markets, and what I do see is that the U.S. I have to be careful a little bit what I say, but I think the U.S. does not want the Chinese playing in their backyard, in that they view their backyard as the Americas, right? And that includes Canada, Mexico, and all of South America. And I think it's very clear that Chinese are very strong in Africa and Asia, and I think that the answers are different. I clearly don't believe the Americans want to see the Chinese in Canada in terms of owning significant assets there. But I see no long-term effects between the U.S. and Canada. I think that will be resolved very, very quickly.
Yeah.
Anyone else have any comments on that?
Well, just building on Peter's comment, that to have China deeply rooted in Canada, we become the battleground between those two. They're sending a very clear message, just as Russia sent to the Ukraine joining NATO. Get out of my backyard. And if you don't, you'll pay the consequences.
Yeah. I mean, I as you know, Ben, I haven't been bullish on Canada for a decade, and I've recently turned very, very, very bullish Canada, just because I think that the capital has to go somewhere, and capital is better suited in Canada than anywhere else. I would personally, in my fund, I would look at if we could get rid of the whole flow-through financing thing as a non-Canadian, there would be a rush of U.S. capital into Canada.
I do think also something that's coming out of this is there's sort of a subtext of people looking at Canada as a source of resources. And I have to wonder if Greenland's really strategic from a military perspective or from a resource perspective, because as we all know, with the melting of some of their ice caps, the more and more minerals are becoming apparently. We all know that the Greenland's rich in certain minerals, and as more ice melts and more land is available, it's kind of appealing. So, we were kind of going into a bull market for all the commodities, and I always think that there's sort of this underlying view that Canada's sitting there as this giant bread basket of commodities, and that other people realize it, but I'm not sure Canadians realize it.
Right. Yeah. It is a bread basket of commodities. We just need to open it up. So I wanted to give each and every one of you an opportunity to talk about your underlying businesses. We'll start in the same order we went through the initial discussion there. So Rob, if you don't mind, you can tell us a bit about McEwen Mining and where the company is at today and what you're doing in 2025.
3 active mining operations, gold and 1 silver, and a very large copper project. I think we're trading at a large discount to our net asset value. The copper mine, if I were to put it on a gold equivalency basis, it'd be over a 50 million ounce deposit. Based on the current numbers, it would be one of the lowest cost copper mines out there. run for 27 years, and that's only mining 40% of what we've outlined drilling. So, you know, at about $1.02 a pound to produce, and you can sell it at $4, you're looking at a 75% gross margin. And if it's equivalent to, let's say it's equivalent to gold, I said it was over 50 million ounces, producing gold at about $700 an ounce cash and just under 1,100 all in sustaining. So that's a very large asset. We have another 4 million ounces outlined in our Timmins area and in Nevada. So we do about 130,000 ounces last year to our credit. We'll be doubling what we're doing in Timmins, and 3 years out we're looking at just under 250,000 ounces a year. And our costs would be, right now they're sort of high, they'll be in the mid-range then, around 1,700. So we trade on the New York Stock Exchange and Toronto. New York is our most active. We trade in the last 3 months average over 600,000 shares a day. So very liquid. I own 17%, and since we created McEwen Mining in 2012, my salary is $1 a year. So trying to be shareholder friendly.
Yeah, that's great. And like you said, there's probably even a lot of unaccounted for value in the project in Argentina with the different legislation that's gone through that investors likely aren't aware of. So hopefully we can help shine a little bit of a light on that. So moving over to
just one more comment. My investment's over 200 million. My cost base
in the company.
In the company, yeah.
Amazing. And Elaine, if you can talk a little bit about OMI for a couple minutes here.
Yeah, absolutely. Yeah, so yeah, as everybody gathered, I was talking about Guyana. So OMI is in Guyana, which is in South America, not West Africa. So yeah, it's OMI was a past producing mine. It actually produced 3.8 million ounces. When the gold price was very low, it was $400 when they started. It almost touched $300 an ounce. So it was shut down in that environment, and it reverted to the government. So it came back out of the government in 2019, and so we drilled and have proved up about 4.3 million ounces in 2 different deposits. The one is a very large open pit deposit, and even though you might think it's deep because there was a mine there before, it's actually that they'd left behind several sub-parallel zones and a long strike. So we've kind of blasted through 343-101 resource estimates, and did a PEA, a preliminary economic assessment last year for about a 1.8 million ounce mine producing around 150,000 ounces a year for 13 years. But that's only one of the 2 deposits, so we knew it was much larger. So we've been drilling. We've drilled another 20,000 meters since then, and we were going to stop at this point and do another resource estimate, but we started hitting these very, very wide, good grade zones late last year, and we were hitting things like 4.5 grams over 57 meters, which for a gold project is amazing. Also realize that, you know, we're looking at an open pit mine. And so we've started drilling a long strike of those. It's almost like having a mine within your mine. And so it's pretty exciting. And so we're basically going to keep drilling and see exactly how large are those really large zones. We have a second deposit that we're also going to drill and do one of those holes underneath our open pit deposit, just to see how deep does this thing go. So, you know, we're pretty sure we're going to be, we'll do the updated resource, then we'll power through to an updated economic study that we expect to be significantly larger. So we're trading at about $40 an ounce based on the resources we defined over a year ago. So yeah, it's kind of exciting. We're trading at 40 cents. We're on the TSX Venture Exchange. And yeah, we're kind of the flavor of the month. We've been at a lot of conferences, and yes, Paolo laughs because as we all know, sometimes we're not the flavor of the month for a long time, but we just, you know, you keep at it, and suddenly one day everybody realizes, hey, this is a great project. So So yeah, we're enjoying it. We trade almost 2 million ounces, or 2 million shares a day, and Ben knows he was here since the beginning. So hey, Ben, we've come a long way,
Yes, yes, you have.
and we have a long way to go.
It's been great to follow though, and you're off to the races now, so it's good to see, and I imagine more to come. Quite a big year for OMI in 2025, and quite frankly beyond. So not flavor of the month, flavor of the next couple of years, hopefully.
Let's hope so.
And then Peter, if you don't mind chatting a bit about Allegiant Gold.
Yeah, so Allegiant started more as a project generator in the early 2010-11, where we made the discovery of Eastside, which is our flagship project right outside the town of Tonopah in 2014. At this time, Allegiant was part of Columbus Gold, which had another project in French Guyana called Montendor, Paul Isnard. We separated the companies in 2018, and then 2019 I took over the helm at the end. And we have funded ourselves primarily by selling most of our non-core projects to finance the development of Eastside, which is a 1.5 million ounce deposit from our last 43-101, which was done in 2021 at gold at around 1,700. We've drilled about 20,000 meters since then, 25,000 meters. We made a discovery on a high-grade zone under what was the design of the pit shell of the open pit mine at Eastside. There's two main zones. One is the north, one is the south. The south is relatively at surface, fairly low strip. And there's a former producing mine called the Boss Mine there, which our goal is to put that into production at some time. We'd like to expand the resource there. And then the other resource, the majority of the resources are the north part of the deposit, where is about 1.1 million ounces of gold from the last resource estimate four years ago. In 2022, Kinross came in, purchased a 10% stake of the company, and we worked very closely with Kinross, which they're just right up the road at Round Mountain, which is their largest deposit in Nevada. I think some things that are pretty exciting going on is two main projects that have really shown high grade and underground deposit potential, which is something we're looking at right now, which is the Phase X at Round Mountain plus the Silicon Merlin project by Anglo Gold at Beatty. And that has kind of pointed us in the direction, given the discovery we made in 2021 of very, very high grade under the pit shell of the east side, or the design of the pit shell. So this year in 2025, we're going to be focusing on the high grade aspect of that deposit, and hopeful that we'll get similar results. We're going to go deeper than we had been, down to 400 to 600 meters to look at the underground potential, and we'll be drilling that this year. So thank you.
Great, and yeah, we're certainly looking forward to that, and again, maybe you can take advantage of some of the M&A that hopefully will start up in the U.S. over the coming months and quarters here. And
well,
then
we've seen quite a bit of it, right? It really is heating up now in the U.S.
Yeah. So we'll keep a close eye on that and look forward to that drilling. And then last but not least, Paolo from Sailfish Royalty. I know we did touch on Spring Valley a little bit, but maybe you can give us more of a company overview.
Yeah, just kind of provide potential shareholders with an outlook. So we look to be executing on our silver option here late April, early May, and that'll give us all remaining silver production from the operations from our sister company, Mako Mining down in Ecuador. That option's $1 million, so our calculated internal rate of return on that option looks very, very favorable to shareholders. As I mentioned earlier, we're expecting the final EIS on July 11th, and that should lead to a record of decision on Spring Valley in August of this year. And the other catalyst that I'd point to is that Mako is looking to do some underground test mining at San Albino in late 2025. So we don't incorporate any of that underground cash flow in our model right now, and so that would be considered blue sky over and above our modeled estimates. And whilst you're waiting for all of that to play out, you're getting paid a 4.5% dividend. So that's kind of the investment thesis there.
Yeah. Well, and I think if I recall, in the last 6 months or so, Sailfish has been one of the best performing royalty companies out there on top of the dividend. So
And it's kind of the reason why I was smiling when Elaine was mentioning it takes 5 years to be an overnight success, right?
Yeah. Well, hopefully more to come, and I do imagine, again, getting those permits in place for Spring Valley will be a major catalyst for Sailfish, as well as that project, getting under construction and so on. So to wrap up, thank all of you for the insights today. Pretty interesting discussion. I think, the mining world is navigating new terrain, and it's going to be interesting to see how this plays out over the next 6, 12, even 5 years, 6, 12 months, or even 5 years. But we'll definitely keep a close eye on it. And thanks again to our panelists and everyone who joined us today. If you would like to see our research, we do cover Oh My Gold Mines with Elaine, Paolo with Sailfish Royalty, and Peter with Allegiant Gold. So you can find all our research on those 3 companies on our website at atriumresearch.ca. And Rob, of course, honorable mention. Thank you for being here today. So with that, thank you all,
Thank you.
and pleasure having you on.
Thanks,
Thanks,
Ben.
Ben.
Thank you.
Thanks, Ben. Thanks, everybody.